All right, let's talk Champion Homes, ticker SKY. The stock absolutely ripped after their latest earnings report for Q3 fiscal 2026. So what's going on here? In this explainer, we are going to break it all down and figure out exactly what drove that incredible rally.
So here's the game plan. First, we'll hit the big headline numbers. Then, we'll peel back the layers and look at the pressure points. After that, it's all about what management is doing. And finally, we'll give you our take, the next call, with a rating and our thoughts on the stock.
All right, let's kick things off with the headline beat, a clear beat on the top and bottom lines. These are the numbers that really got everyone's attention right out of the gate.
So check this out. Champion came in with adjusted earnings per share of 96 cents. And look, in this kind of market, what management themselves called a challenging macro environment, that is a really strong number. Now, to put that 96 cents into perspective, you have to know what everyone else was thinking. And the street? Well, they were looking for 84 cents. And there you have it, a clean 12-cent beat. This is exactly what lit the fire under the stock. It's a sign of really solid execution, something the market was clearly not pricing in.
And it wasn't just on the bottom line. The top line told a pretty similar story. Revenue landed at $656.6 million, which was about $9.5 million ahead of what analysts expected. Now, yeah, that 1.8% year-over-year growth might not sound like much, but in this housing market, trust me, any growth at all, especially when you're also beating expectations, is a huge win.
Okay, so the headlines look great, right? But that's not the whole story, not by a long shot. Let's look at the pressure beneath the surface, a look at the underlying fundamentals. This is where things get really interesting.
So you gotta ask yourself, right? With a beat that strong, was everything perfect? What was really happening under the hood? And the answer? Well, it's a definite yes, there were some red flags.
Okay, take a look at these numbers. Gross margin, it got squeezed by 190 basis points compared to last year. Adjusted EBITDA, down over 10%. And here's the real kicker for me. The backlog, which tells you about future business, dropped a whopping 15% in just one quarter. I mean, these are not small numbers we're talking about here. This is some serious pressure. So that leads to the million-dollar question. What is management going to do about it? When you see numbers like that, the company's game plan becomes absolutely critical. This is what you're really investing in.
And to their credit, they were super clear about it. Their strategy is built on 3 key pillars: product innovation, policy engagement, and capital returns. Let's break those down.
First up, innovation. And this isn't just talk. They're actually doing it. They just launched this new Emerald Sky model. It's a 3-bed, 2-bath, about 1,600 square feet. And get this, the retail price is around $185 grand. I mean, that's a direct shot at the affordability problem, especially when the average new site-built home is pushing $500,000. This opens up their market big time.
Next up, policy. This is smart. They're not just waiting around for things to happen. They're trying to shape their own future. They're talking to HUD, they're keeping a close eye on new housing bills. Basically, they're positioning their entire industry as the solution to the housing crisis. You could almost think of this as a long-term call option on the government getting serious about housing.
And the third pillar, and this is a big one for investors, is capital returns. This company is just printing cash, $100 million in operating cash flow just this past quarter. And what did they do with it? They bought back $50 million of their own stock. And on top of that, the board just gave them the green light for another $150 million in buybacks. That is a huge vote of confidence.
Okay, so let's put it all together. This brings us to the next call, our rating. How in the world do you reconcile those weak fundamentals with that crazy stock rally? Well, this is where we have to make a decision.
And this really lays out the whole tug-of-war, the bull versus bear case. You've got the bear arguments on the left, margin pressure, falling EBITDA, shrinking backlog, all stuff that would normally tank a stock. But then you look at what the bulls and the market latched onto. That strong EPS beat, all that cash they're generating, and that massive buyback program. At the end of the day, the market basically said, we care more about execution and cash back to us than we do about the tough environment right now. And the result of that decision? Well, it was pretty clear. The stock rocketed up almost 11% after the call. It wasn't even close. The bulls absolutely ran the table on this one. So when we weigh everything, their ability to execute in this tough market, that very clear 3-part plan, and the huge commitment to returning capital, we're initiating our rating on Champion Homes. And that rating is outperform. So here's the bottom line, our thesis and trade idea. For Q4, we think they'll hit their numbers. Management seems to have set a pretty conservative bar. We expect this stock to probably chop around a bit here, kind of consolidating, until the spring selling season, which is the next big thing to watch. The whole thesis is this. In a tough market, investors are paying up for companies that can just get it done and give cash back. So, the trade idea? We'd look for any dips or pullbacks as a chance to build a position before we start getting that spring data.
And of course, we have to end with this very important reminder. This is just our analysis. It is not financial advice.